let's talk about another strategy for super stocks, and it's the super stock dividend strategy. And what we like to do with the dividend strategy is we like to invest in super stock companies that have the history of increasing their dividend. And when you receive a dividend, that reduces the cost basis of your stock and allows you to compound your returns. And the nice thing about this strategy, there's no complicated math or formulas. So we simply want to identify super stocks by their price pattern in the 20-month EMA and 1-month price, identify stocks that are super stocks, and then we look to see their history of dividends, and we like to see that they have a history of increasing their dividends. We found that the dividend growth rate is a very reliable forecaster of the future earnings growth and the financial health of a company, because corporate directors, they're not going to raise the dividend if they don't believe that the future earnings can sustain the payout. So they're not going to raise the dividend unless they know those future earnings can meet that dividend. So it's a very reliable indicator for companies that are growing their earnings and their general financial health. So if they're steadily increasing that dividend, then those corporate directors are thinking, well, the future earnings are going to be good, and we can pay out that extra dividend, and we can keep increasing that dividend. So this is a great forecaster of good companies to invest in. So again, we use the super stock strategy. We identify stocks with a major trend system that have consistent and predictable price patterns and that have a history of raising their dividends. And again, these super stocks typically are low volatile. Even though they're low volatility stocks, they outperform the major stock indexes. They have a low number of sell signals, and you're probably not going to get stopped out of these as quickly as you would with a growth stock or a high beta stock, obviously. So we like to focus on these low volatility stocks that have good predictable returns. And when we're selecting these dividend stocks, we use the Keltner Channels again, and to help us identify a low-risk entry point. And again, here's the Keltner Channels. This is a daily price chart of Home Depot stock, and which is this red and black line here, and we have the three Keltner Channels, and we can see this blue line here is the upper Keltner Channel. The dotted line is the middle Keltner Channel, and of course we have the lower Keltner Channel. And when we're looking to buy a stock or an option, we always wait for a retracement and buy that stock or call option when the price of the stock is trading near the middle or lower channel, and we get a much lower risk entry that way. And what we don't want to do is buy when the stock is up above that channel or trading close to the channel, because that's an indication that the stock is overbought, and we want to avoid our entries when the stock is overbought. And we simply wait for a retracement of the stock, and if you wait for the retracement, then there's usually a rally after that retracement. So we can see retracement, rally, retracement, rally, retracement, rally, retracement, rally. So we simply wait for that retracement to buy our dividend-paying stock. So let's look at some super stock dividend trade examples. This is for Realty Income. This is Real Estate Investment Trust. We've owned this for many, many years, and we trade both options and stock with Realty Income. And nice thing about Realty Income is it pays out a dividend every month. So you really get a chance to compound your returns when you're getting a monthly dividend. And here's an example. We recently added to our position of Realty Income, and again, you can see this is the daily price chart of Realty Income. It's a real estate investment trust, and we have the 3 Keltner Channels here. We waited till it retraced towards that middle channel, and then we added to our position. We bought 800 shares of Realty Income at $58.20. So we use the Keltner Channels to also help us time our purchases of these dividend-paying stocks. Here's another example. This is for Public Storage. This is also a real estate investment trust, and you can see that this has had a steady price increase since mid-2009, pays a really good dividend. So we recently added to our position of Public Storage, and we waited until it was trading near this middle channel here, and on March 10th, we bought 200 shares of Public Storage at $248. So we bought it right in here when it touched this middle channel. Now it's trading at $268, so we have about a 20-point profit on this one since March 10th. Here's another example. This is the Consumer Staples Etf, and you can see a very low volatile ETF, steady price increases, very predictable price pattern here. So we bought this for the to capture the dividends, and we waited till it retraced towards that middle channel, and we bought 900 shares at $51.05. So these are just examples of using the Keltner Channels to help us time our entry. Here's one more example. This is for NiSource, the gas utility stock. Again, this one has a 253% total return over the past 10 years versus the S&P with 94%. So I'd much rather own this than the S&P because you can see very predictable price patterns here, very repetitive price patterns. So I'd rather own this stock or a call option on this stock than the S&P. And here's an example. We bought NiSource when it retraced towards this middle channel. We bought 2,000 shares at $22.40. So here's one more. This is Utilities ETF, and we purchased this for the dividend. And again, we waited right in here until the ETF retraced towards that middle channel, and then bought 1,000 shares at 46. This is trading around 49 today. So with these examples, you can see that the Keltner Channels allowed us to get low-risk entries as the stocks or ETFs did not retrace much from our entry point. So we like to use these Keltner Channels when we're picking out dividend stocks to buy. And this, of course, if you get a low-risk entry, that helps prevent getting stopped out of your position. So